Following the money, the enduring business of war. War is often framed in terms of ideology, security, national interest. We speak of freedom threats, the solemn duty to protect. But beneath these narratives, there is another, more tangible story. A story of economic supply and demand, immense financial gain. To understand modern conflict, we must follow the money. Trace the flow of capital. It reveals that for a select group, war is more than politics. It is a profitable business enterprise. War generates wealth, a documented economic reality. When nations go to war, governments unlock vast public money. Budgets expand with urgency. The spending becomes a powerful economic engine, yet benefits are not distributed equally. Citizens bear costs through taxation and sacrifice. Corporations and financiers capture revenue. Understanding this is crucial. When profit becomes a motive, it can distort decision-making and prolong violence for financial, not strategic reasons. The financial dimension operates through interconnected channels, a complex ecosystem that thrives in instability. Manufacturers building missiles, private security firms guarding embassies, construction companies rebuilding shattered cities, bankers financing national debt. Each player has a stake. These actors are visible, often publicly traded companies with shareholders and quarterly earnings reports. Their business models depend on government contracts. Defense and security contracts skyrocket during war. The incentives are clear and powerful. To analyze conflict without economics is to miss part of the picture. It ignores interests that may want a war to begin, continue, or expand. Asking, who profits, shifts focus from abstract justifications to concrete, measurable outcomes. We see the web of contracts, the lobbying efforts, the political donations. This is not questioning soldiers' bravery or genuine security concerns. It is a call to remain vigilant and to keep them honest. The Arms Bazaar, a market fueled by conflict. The most direct and visible beneficiaries of war are the arms manufacturers. These are the corporations that design, produce, and sell the tools of modern warfare. Their product lines include everything from fighter jets, naval destroyers, armored vehicles, rifles, sophisticated missile defense systems. When international tensions rise or a conflict breaks out, the demand for these products surges. Governments place massive orders to equip their own militaries and often to supply their allies. This increased demand translates directly into higher revenues and soaring stock prices, making them a primary financial winner in any armed conflict. The business model of an arms dealer or a large defense corporation is fundamentally tied to the existence of perceived threats and active hostilities. Peace and diplomacy, while beneficial for humanity, can lead to reduced defense budgets and fewer sales. Consequently, this industry has a powerful incentive to lobby governments for increased military spending, even in times of relative calm. They invest heavily in political campaigns and employ legions of lobbyists to influence policymakers, ensuring that the pipeline of government contracts remains open and lucrative. The argument is always framed around preparedness and national security, but the underlying motive is the bottom line. Consider the tangible examples from recent history. During conflicts in the Middle East and elsewhere, the stock values of major defense contractors like Lockheed Martin, Raytheon, RTX, and BAE Systems have consistently outperformed the market. A single government contract for a fleet of F-35 fighter jets or a batch of Javelin anti-tank missiles can be worth billions of dollars. These sales are not just one-time transactions, they create a long-term revenue stream. Weapon systems require maintenance upgrades, spare parts, and ammunition for decades, ensuring a steady flow of income for the manufacturer long after the initial sale is completed. This cycle of profit is further amplified by the global nature of the arms trade. Weapons manufactured in one country are often sold to many others, sometimes even to opposing sides in regional conflicts through intermediaries. The regulatory systems designed to control these sales can be complex and at times porous, allowing weapons to flow into volatile regions and fuel instability. For the arms dealer, a tense world is a world of opportunity. Every new conflict is a new market, and every depleted stockpile is a chance for a new sale, creating a self-perpetuating cycle where the tools of war generate the very instability that drives demand for them. The Shadow Army, private contractors on the front lines. Beyond the manufacturers of weapons, another industry has boomed in the landscape of modern warfare: the private military and security contractor. These are the companies that provide services once exclusively handled by national armies. Their employees, often former soldiers, perform a wide range of duties, from guarding military bases, embassies, convoys, to providing logistical support, intelligence analysis, even training foreign troops. In conflict zones like Iraq and Afghanistan, private contractors became a ubiquitous presence, at times outnumbering the official military forces of certain coalition nations. This outsourcing of war has created a multi-billion-dollar industry built on government contracts. The appeal for governments is clear. Hiring a private contractor can be a way to supplement troop numbers without resorting to unpopular drafts or politically sensitive deployments of national soldiers. These companies can also be deployed quickly, offering specialized skills that a military might not have readily available. This perceived efficiency and political insulation make private military companies an attractive option for defense departments, which award them massive contracts, often non-competitive contracts, to operate in war zones. However, this reliance on a shadow army comes with significant problems. The primary motive of a private contractor firm is profit, not necessarily the successful completion of a national security mission. This can create skewed incentives. For example, a company paid to provide security has a financial interest in the continuation of the threat it is supposed to be guarding against. If the conflict ends and stability is achieved, the contract may be terminated and the revenue stream disappears. This fundamental conflict of interest can undermine broader strategic goals and prolong instability, as the very presence of armed contractors can sometimes escalate tensions with local populations. Furthermore, the issue of accountability is a persistent challenge. Unlike soldiers, they are not always subject to the same military justice system, and prosecuting them in civilian courts across international borders is notoriously complex. After the bombs have stopped falling and the fighting subsides, another phase of the war economy begins: Reconstruction. The very destruction wrought by conflict creates a new and immense market for a different set of corporations. Cities, bridges, roads, power plants, oil refineries. This process requires vast sums of money, often financed by the victorious nations or through international aid. It presents a golden opportunity for engineering firms, logistics firms, construction firms. The business of rebuilding what war has broken can be just as profitable as the business of breaking it. The awarding of reconstruction contracts is often a rushed and chaotic process taking place in instability and weak local governance. This urgency creates conditions ripe for cronyism and no-bid contracts. For example, in the aftermath of the 2003 invasion of Iraq, companies like Halliburton and its subsidiary KBR and Bechtel were awarded billions of dollars in contracts restoring oil infrastructure, building schools, hospitals. The primary goal can shift from effective reconstruction to maximizing profit. Auditors and government watchdog agencies have repeatedly uncovered evidence of massive waste, fraud, and abuse. Contractors have overcharged for services billed for work that was never completed or delivered substandard results that quickly fell into disrepair. The money intended to help a nation get back on its feet is instead siphoned off, enriching corporate shareholders while leaving the local population with broken infrastructure and deepening disillusionment. The Reconstruction Windfall benefits a select few while the country itself remains fragile and dependent. Alongside the formal, contract-based profiteering war, invariably gives rise to sprawling black markets and other hidden economies. The breakdown of state authority, the destruction of normal commerce, the desperate needs of a population create a perfect storm for illicit trade. These shadow economies are run by a diverse cast of characters, including warlords, corrupt officials, opportunistic criminals, elements of occupying forces. They profit from the chaos by controlling the trade of essential goods, natural resources, weapons. This is the underbelly of the war economy, less visible than corporate earnings reports, but just as significant. One of the most lucrative black markets in a conflict zone is often for fuel, other essential supplies. In war-torn regions, large quantities of fuel, food, medicine are shipped in for military forces and aid organizations. With lax oversight and countless opportunities for diversion, A significant portion of these goods can be siphoned off and sold illegally at exorbitant prices to the local population. A fuel truck driver, a corrupt quartermaster, a checkpoint guard can make a fortune by skimming a small percentage of the vast logistical river flowing into the country. This theft not only enriches criminals, but also deprives soldiers and civilians of critical resources. Natural resources also become a major source of illicit profit. In countries rich with oil diamonds, timber minerals, warring factions, and criminal networks will seize control of these assets to fund their operations. This is the phenomenon of conflict resources, where the sale of a country's own wealth is used to perpetuate violence against its people. Warlords become businessmen trading diamonds for guns or oil for cash on the international black market. Financial institutions, commodity traders, and distant global capitals can become complicit, whether knowingly or not, by failing to perform due diligence on the origin of the goods they are handling. Finally, the financial system itself becomes a tool for profiting from chaos. The massive influx of cash into a war zone combined with a weak banking sector creates enormous opportunities for money laundering. Shell companies are established to win reconstruction contracts, which are then used to legitimize illicit funds. Corrupt officials use their positions to extra-legally transfer government funds to private offshore accounts. Financiers offer sophisticated services to move this dirty money around the globe, hiding its origins and making it appear legitimate. In this way, the global financial system provides the essential plumbing that allows the profits from informal war economies, to be secured and enjoyed. While the profits of war can be precisely calculated on a corporate balance sheet, the true costs are measured in human lives and societal devastation. These costs are borne not by the arms dealers, the contractors, the financiers, but by the soldiers sent to fight and the civilians caught in the crossfire. The most immediate and irreversible cost is the loss of life, the physical wounds carried by survivors, the psychological wounds carried by survivors. For every missile sold, there is a potential target for every security contract, a threat that puts lives at risk. The business of war externalizes its gravest consequences onto the most vulnerable. The economic devastation for the average citizen is profound and long-lasting. War destroys not just buildings, but livelihoods. A farmer can no longer tend his fields, a shopkeeper's store is reduced to rubble, and a factory worker's job disappears. The entire economic fabric of a society is torn apart, leading to mass unemployment, hyperinflation, and widespread poverty. The reconstruction money that flows in rarely reaches these individuals. They are left to navigate a shattered economy where survival itself is a daily struggle, while the wealth generated by their country's destruction accumulates in offshore bank accounts and distant stock portfolios. The damage extends deep into the social and political structure of a nation. The flood of weapons empowers militias and undermines the authority of legitimate government. Corruption and war contracting erodes public trust in institutions. It teaches a generation that the path to wealth is through violence and graft, not production, not civil service. This corrosion of trust and law makes establishing lasting peace incredibly difficult. The legacy of profit-driven war is often a broken state, susceptible to decades more conflict. Nations that wage these wars also pay a steep, less visible price. Government debt from conflict must be paid by taxpayers, often through cuts to education, healthcare, and infrastructure. Returning veterans bearing physical scars require lifelong care, and mental scars require lifelong care, placing a multi-generational burden on the state. In this sense, a few corporations' profits are subsidized by the public. The true ledger of war shows a small column of immense private profit next to a vast, sprawling column of public debt and human suffering. The recognition that war is a profitable enterprise is not a counsel of despair, it is a call to action. If we understand the economic incentives that fuel and prolong conflict, we can design mechanisms to counteract them. The most powerful tool at our disposal is transparency. Secrecy shrouds defense budgets, arms deals wartime contracts. That secrecy allows waste, fraud, and skewed incentives to fester. By demanding and enforcing radical transparency, citizens can hold governments and corporations accountable. We must insist on knowing where the money is going. This requires concrete, practical reforms. First, make all government contracts public, military security reconstruction efforts, in a clear, accessible format. No-bid contracts must be the rare exception. Each exception needs rigorous public justification. Independent auditors with real authority and resources must be empowered to scrutinize spending in real time. Strengthen whistleblower protections. An auditor's report should carry the weight of law. Second, strengthen international laws and strengthen national regulations. Regulate the arms trade police, private military contractors. Create a robust international registry of arms. Sales set legal frameworks to hold contractors accountable for crimes abroad. Hold financial institutions to higher due diligence standards to prevent laundering of conflict-derived money. Mandate hiring locally for reconstruction. Ensure recovery funds rebuild from within, not extracted by foreign corporations. Reduce war by prioritizing diplomacy and conflict resolution. But as long as conflicts persist, we must scrutinize their economic dimensions. Following the money is not cynical, it is civic duty. Decisions of war and peace must be based on public safety, not a few profit margins. Ensure sacrifices of war don't enrich a hidden network of beneficiaries. We must keep asking the question and demand the answers,